heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Caroline Hyde at Bloomberg's world headquarters in New York. Ed Ludlow is on assignment and joins us shortly. This is Bloomberg Technology. Coming up, we'll break down earnings from Salesforce that disappoints, and C3 AI, the artificial intelligence hype hits reality with disappointing earnings from that company too. But let's stick on AI in the here and the now with Palantir. We go live to Palo Alto, California, where our own Ed Ludlow is sitting down for an exclusive conversation with the CEO. Plus, we'll have more on, guess what? Artificial intelligence, how Wall Street is using it, how the technology is replacing our jobs, and even how AI is replacing ourselves. We'll have more throughout the hour. But first, let's check in the markets. 1% higher on the NASDAQ. We are seeing some relief, whether it's about the debt ceiling agreement in the House that goes to the Senate, whether it's about what the Fed speak is like at the moment. Some key players at the Federal Reserve really talking about a pause coming up for the next meeting. And ultimately, we'll look forward to what's happening in terms of the jobs data, because still that jobless claims number looking strong, even though manufacturing did just ease off, particularly with some of those price pressures too. The Golden Dragon China Index, of course, NASDAQ Golden Dragon, showing how Chinese companies are performing when traded here in the United States, really rallying today, up 4.5%. Maybe that's on the back of some hope that maybe the worst has been sucked out in terms of some of the money sold out of the Chinese market of late. We're seeing a 2-year yield that bounces down by some 6 basis points. That on the fact that maybe we get some sort of Fed pause. But let's move it on to the world of crypto, because actually we see dollar being drawn down, but so too is crypto. We're seeing it 0.8% down on the Bitcoin. So not much desire to be getting into this particular risk asset, even on a day where we're more optimistic about the debt ceiling. Let's move it on to what individual companies are on the move. I've got to focus in on some of these earnings. I've got to be looking at what's happening for the likes of Salesforce, up by 4.5%. Look, 10% growth in the forward-looking guidance isn't enough for the investor base right now. We saw more of a concern about that number, even though they managed to beat in the current quarter in terms of their overall revenue and profitability. C3 AI, big drag. We're going to be talking that stock in a moment, down 11%. Because again, the forward-looking guidance not living up to expectations. This is a company that's signaling that it could see 20% growth, but really the monetization of generative AI not coming immediately as they see more trials, they see more, well, landed, some deals, but Bloomberg Intelligence Mandeep Singh really saying at the moment that this is continuing concern to really make this actually generate revenue, not just hypothesis. Remember, a lot of shorts on the stock as well, about 30% in the open market is shorted. And we're looking at Nvidia, though, actually getting back into this name by a healthy more than 4%. Look, it's not back at that $1 trillion mark right now, still at that 900 million and thereabouts. But this is a company, of course, 900 billion, I should say. But of course, this is a company that people are still wondering about how their communication with China goes, and indeed where the CEO lands next in terms of the future of artificial intelligence. We're going to talk so much more about AI right now, because I'm very pleased to say, of course, we want to be welcoming to an audience where we're going to be discussing so much more the future of AI, with the likes of one key executive who wants to take the whole market. On that, I want to welcome our Bloomberg TV and our radio audiences. We want to send it over now to our one Ed Ludlow, who's sitting down with an exclusive interview, the CEO of Palantir, Ed.
Yeah, we're joined by Alex Karp, the CEO of Palantir at AIP Con, Artificial Intelligence Platform Con, a chance for you to talk with customers about some of what you told us 3 weeks ago. And on that note, 3 weeks ago, you said that Palantir's plan for AI was, quote, just take the whole market. How's that going?
Well, you know, unlike most people, we've been involved in what people call AI for the last 5, 6, 7 years in the classified environment. Building systems that will allow you to identify adversarial positions. And in that context, we built proprietary technology that will allow you to work with large language models, securely enhance them, roll them across your whole enterprise. You know, I've been at this for about 20 years, and I know it will take everyone else 4 or 5 years to build this. We're rolling it out. Our customer base is large, and we have, you know, usually we have to go out and find people. Now we have customers, especially in the U.S., just calling us every day.
You said the demand is huge. Yeah. Can you quantify it in some
way?
Well,
you know, usually, we've had a number of inbound calls in a year that we usually have in a year in like a month. And then if we're at a conference, if you go next door, there are customers showing potential customers how to use our product.
in a demo sense.
Well, it's on real data. It's things that they've done. So right now, the whole world is hungry for something that it understands as AI, which is really AI or large language models. We are actually have customers using our products, showing other customers how to do it. I mean, this is like you release a song and everyone else playing it. It's like, okay, great, we're very happy. And you know, the thing is, the U.S. market is just hungry for innovation. It's hungry for things. It's now beginning. Beginning to understand it needs, like an ability to map an LLM onto your enterprise securely, ability to enhance the output of a large language model, and what's the output? Better margins, better safety. You can change your enterprise in weeks.
I just want to jump in and ask a very basic question. AIP.
Yeah.
Is it built on GPT-4 or a different foundational model? What is the underlying tech?
We are completely agnostic to whatever large language model you want to use. Large language models have certain attributes, like they can give you reasoning, but you can't import that reasoning into your enterprise. What AIP does is allow you to take the benefits of the large language model, enhance them with algorithms that we help you build, and roll it securely across your whole enterprise. And what does that mean? It means you get all the benefits of a large language model in your enterprise today, not in 5 years, not something that writes poetry. We're not offering people poetry writing in their enterprise. We're offering things that are so powerful that in reality, I'm not sure we should even sell this to some of our clients, like national security.
Who are those clients? Well, who are those clients? Proportionately, when you think about demand, how much is coming from the defense use case, since you kind of gave more flesh to the AI bones at during that earnings call?
Look, what's driving our demand for our product in defense is simply what people have seen on the battlefield. And that's very sensitive and very classified. But the demand for that is very large. It's going to get larger. Why is it going to get larger? Because America is the best at software. Software that's built in a product is in high demand in defense. Why is it also in demand? Because until 2 years ago, everyone thought this was a joke. We were building systems over the last 5 years that are deadly. Those deadly systems have changed the course of history. It's no longer madman saying this. You see it on the battlefield. In U.S. commercial industry is the most adaptive in the world, and they are hungry. Our clients are hungry for things that will give them a disproportionate advantage on margins, on safety, on secure use of LLMs, on making sure this is not just some poetry recreating what somebody said, but actually can create actual tangible difference. And we are rolling it out, and we're very happy.
For our global Bloomberg television and radio audiences, we are at AIPCon. We're joined by the CEO of Palantir, Alex Karp. During that earnings call, you said, "We have no pricing strategy. We're going to create a lot of value, we're going to get hundreds of customers, and we will price it as we go." Have you made any progress on pricing strategy since that point?
No. Why? Okay,
Why so relaxed about it?
Because it's like one of these things. Like when you go to a bar, you know everyone wants to meet you. Do you have a pricing strategy when you go to the bar? No. You're like, oh, I'm cool. I know we have the best product on the market. I know customers will pay us fairly. I know that it's much more valuable than anyone will understand until they install it. And we will sort out. To make it like slightly academic, I believe in Pareto optimization. We are going to create a lot of value, and we're going to get some portion of that value. And customers are smart; they'll pay you some portion of the value. Why should just as an axiomatic thing? If you have a software product, you always want to get paid after you deliver value. If you've got a PowerPoint, something that doesn't work, something that's not valuable, you want to get paid before you create value. We know it's valuable. We know it's much more valuable than people understand. We know we're going to continue to augment that value, and we're going to get paid along the way.
Well, the counter consideration is how much you invest in the product.
But we've already invested billions in building these things in various components over the last 20 years. And we have the IP, and we're basically sewing it together and adding things on top of it. And so we know we have the IP. We're certain of the value. Why would we? So again, I come to you. I'm like, hey, I'm certain this is very valuable. Pay me $10 million. What are you going to say?
Well, I don't have $10 million, but if I were a customer.
Well, okay. Give me your British charm.
Well,
for your British charm.
My British charm, if I were a customer, would say this is a really hard environment. If I think about cloud,
exactly,
customers are looking for value, but the lowest price.
So now, if you believe you have the best product in the world, what are you going to say? Okay, great. Let's not even have that discussion. I'll create the value. You tell me how much value it create. By the way, if you don't want to pay me, then I'll go to someone else who will. You can have different margins than the person who will pay me. You can have a different safety profile than the people. You can have a different ability to control your whole business from your laptop than someone else, because the person who valued it paid me. If you don't want to pay me, great.
Alex Karp, CEO of Palantir Technologies, this morning, the Bear Cave, a Substack-based newsletter, put out a negative report akin to a short report. Let me just read one of the claims. The Bear Cave believes Palantir is an AI imposter engaging in spurious games to inflate its books and obfuscate its less sexy role as an overhyped data consultant. What is your response to that?
The Bear Cave is a bear cave. They can stay in their bear cave. We're a profitable software company. Those are interesting critiques of us, and we have the best products in the market, and that's why they're profitable, and we will win.
Wanted to give you the right response. That was all. The core of Palantir's pitch, right, is that you have this experience in managing sensitive, classified, often data networks or closed networks. How does that work in the training of the LLMs that are going into AIP? Is it difficult when you have that kind of restriction on the data source?
It's a very, very, very important technical question. To use LLMs at scale in a classified and sensitive environment, you have to have something like a data model that trains the data model, and something like branching and access control. Those products take decades to build. We have them. But if you have those products, you can segment in real time what the
They're already built?
They're already built. They're already part of all of our core five. They're part of PG. They're part of Foundry. We roll them out to our current customers. Many of our customers have not needed to use these. They now need to use them. Why do they need to use them? Because if you in any environment, you're going to have records that you're going to have data and insights you're not going to share with a large language model. You're going to have data and insights you do want to share, and you're going to have a hybrid, and that requires a segmenting, branching architecture. And one of the things we built over the last 10 years randomly, because we thought it would be valuable someday, was that.
For our Bloomberg radio and television audiences worldwide, we are with Dr. Alex Karp, the CEO of Palantir. An interesting case study is Ukraine. You've deepened your relationship and activity with Ukraine using AI, in one case, to help with reconstruction.
Yeah.
How else? Explain how it works.
By the way, my real answer to the short people is ask the Russians.
What do you mean by that?
It's like, we can't save it. Ask the Ukrainians, ask people who are on the battlefield, ask people who have been subject to...
You're talking about the effectiveness of your...
effectiveness of our product.
Okay.
So it's like, there's very little we can say. You can read what the Ukrainians are saying they use. Targeting, according to reports, has gone up, given the use of AI by products, potentially ours, from by 20 to 50x. These products have changed the course of history. And they will continue to change the course of history, and I'm super proud of that.
Do we already have, in the military use case, an arms race between powers like the US, Russia, China, specifically in the field of artificial intelligence?
Yes, and we have an advantage. And if we don't get out of our own way, we might actually continue to win.
When you say we get out of our own way, what do you mean by that?
Well, America has the best software companies in the world. The software companies largely come from a sliver of America. They produce products. We need to get to a point where 1% of our spend on defense goes to products that have been proven on the battlefield, not PowerPoints. And so, in the large language model and the generalizable AI, we are far ahead. Call it a year or two, but we must actually implement. And there's a huge debate. Part of the debate, of course, is these things are very dangerous. If we didn't have vicious adversaries, we should slow it down, but we do. But we also have lots of people who don't want to roll this out because they have nothing to roll out. And so there's the debate machine about rolling this out is partly for legitimate reasons, because this could be dangerous, partly for security reasons you brought up, but there are architectures that will allow you to deal with this as a product, like Palantir and hopefully someday others. But there's also the debate machine because there are only 3 or 4 companies in the world with anything to sell. And everyone else wants to debate, why should we do this? How should we do this? Can we play catch up? Can we talk about this in 5 years? That really plays into our adversaries' hands, and we really have to avoid that.
The long-term concern that came up 24 hours ago or 48 hours ago is an existential threat from AI. You talk at Palantir about bending AI to a collective will.
Well,
do you share the concern, though, about an extinction-level event?
There's a lot going on there. Are these things dangerous? Could they become potentially dangerous? Could they become... Yes. But what these debates ignore is either we will wield them or our adversaries will wield them. It is much better if we wield the technology than our adversaries who do not respect our norms, do not respect the rule of law, and do not respect the way we want to live in freedom. So that's point one. Point two, in the near term, What Palantir will allow you to do is make these things really, really valuable commercially and in the military context. And in commercial context, you have to do it because if you don't buy our product, your competition will. In the military context, we have to do it because our adversaries will build those products.
Right. You talked about the competitive landscape. I actually wanted to ask you about C3 AI as an example, because you come up in bidding processes with them.
Actually, look, this is a massive market. We actually don't come up with bidding processes with anyone. And I'll tell you what I think about everyone.
So you don't have any competition?
Let me just tell you about this competition thing that Wall Street analysts love. It's complete BS. This is an infinite market, basically. Try what we're doing and try what everyone else is doing and buy the thing that creates the most value.
On an infinite market, Bloomberg Intelligence put out this research report this morning that says generative AI as a market will be 1.3 trillion in 2032. That requires compound annual growth of about 40% a year from this point over a decade. Do you see that as realistic?
Well, what I see, I don't know.
Based on the markets you operate in.
Look, these experts just make stuff up. But what we know is this is a large, basically impossible to measure market. And what we also know is everybody in the U.S. is going to find ways to become more efficient and better using software, and a lot of that software is going to be AI-driven. We also know that the market, over time, not in a quarter, will end up picking the best products. That's what we know.
In the United Kingdom, my home country, the FT is reporting that within the NHS, as a case study, there is some concern about deepening the data relationship with Palantir. What would be your answer to those concerns?
Look, outside of America and in the UK, there are legitimate questions that get asked. Where's the data going to go? How is it moved? Who touches it? Does it get exported to the US? Can we verify how it was used under what context? And can we make sure that the underprivileged people of the UK actually get the same treatment as the privileged people, including not just in treatment, but future treatment, which is a huge issue in the UK because there's a backlog. So how do you deal with the backlog equitably? Palantir provides the most robust, transparent software in the world, which is part of the reason we're having an AI bonanza. Because to make AI work, you have to show how it works. How did the transform work? How does the branching work? How does the ontology work? How does it map to LM? This is exactly what you have to show in a hospital context. Who worked with the patient? Under what condition? What doctor? Was the person equitably and fairly treated? What happens to backlog? By the way, we've proven we can do this as a product safely, efficiently, and under the hardest conditions in the UK. And I really hope we win that for our sake, but also for the sake of our UK employees and others that we greatly respect, and because transparency leads to the fairest, most ethical, and justified outcomes you can get.
Dr. Alex Karp, CEO of Palantir, thank you for having us at AIPCon here in Palo Alto.
Thank you.
Back to you.
Take care.
Ed, absolutely fascinating conversation. An AI bonanza. We're going to deep dive into all things artificial intelligence throughout the show. Coming up, we break down the earnings of C3 AI. Apparently, the market is infinite. Well, why is Dan Ives gone outperform this stock? Is that why? He's from Wedbush, of course. Get his thoughts, as well as what's happening in the future for Apple and its AI path. This is Bloomberg. Some of these earnings, the earnings reactions, because Salesforce, tumbling after the software company, signaled it isn't growing as fast as, well, it used to, while, of course, shifting its focus to generating higher profits. Let's get into the risk-reward here with Bloomberg's Brody Ford. And it was a notable drop. We're now studying a little bit. But ultimately, this is a company that's having to do layoffs, having to tighten its overall expenses. Why the sales slowdown there?
Yeah, so last quarter, Salesforce said, we're going to focus on profit now. And the market said, yeah, finally. We couldn't be more excited. And this quarter, they gave us more of that. But then the market started saying, oh, wait a second. But you guys are a growth company. We want to make sure we keep seeing further revenue growth. And so it's one of those funny situations where really almost all the metrics were beat, or at least a meet. But just a slight deceleration in sales has people saying, oh man, are these cost cuts going to weigh on their ability to really keep growing in the way they have been over the last decade?
And it's a similar theme that perhaps we saw with C3 AI as well, is that a company that has significant growth, well, Salesforce is the best performing stock in the S&P 500 this year. C3 AI has tripled in its market valuation. and yet the growth that they're guiding to just isn't living up to expectation.
Yeah, when it comes to C3, so if Salesforce is one of the best in the S&P, C3 is the best tech stock performance. I mean, it's up 300%, right? There's been so much hype, and the big question is it just hype, right? Is it have a real robust AI ability to grow, or are people just buying the ticker because it says AI, you know? And so when it rallied 300% this year, a lot of people say, this looks a lot like, you know, GameStop in 2021 or something.
Yeah.
So I think when the figures last night came in even a little bit light, people kind of panicked and said, oh man, is this hype? Are we getting pulled on the string, you know?
Yeah, and you're someone who's perhaps been laying bare some of the arguments as to why it's hype. Some great writing coming from Brody Fordy. Go and check out his reporting. We thank him for bringing us up to speed on the latest on C3 AI. But one person still likes the hype around the stock. Dan Ives, in fact, from Wedbush Senior Equity Analyst, you rose to an outperform rating and a $50 price target on the stock, right? So talk to me about why. How are you seeing this company capitalize on artificial intelligence?
In my opinion, I mean, they're going through a model transition on the consumption side. And on the other side, they're on their way to what's going to be 500 million of rev and going, because this is an $800 billion market opportunity in terms of AI. And when you look at how Siebel's position is, despite all the controversies, I think from a platform perspective, they're just going use case by use case, continuing to increase their tentacles. And I think the stock relative to where it could ultimately lead, you know, we be buyers here in this dip, which is why we upgrade.
It's interesting that Alex Karp from Palantir, we're just hearing, saying this isn't an infinite market. But I am going to ask the competition question anyway, because that is some of the worry here, the worry that they're very focused on perhaps offering their services to energy companies. They haven't really diversified out of that successfully thus far. And Bloomberg Intelligence are kind of worried about large application software platforms. They're worried about other cloud vendors getting in on the space.
Yeah, and look, no doubt, I mean, this is a Game of Thrones playing out in AI. You know, as Alex talked about, Palantir being one of the core AI plays. You look at what we've seen from Microsoft and NVIDIA, that's really the start of it. But in terms of second, third derivative, there's going to be many winners here. And when I look at C3 in terms of what they built, I think it just speaks to there's going to be many companies that, even though right now you're not seeing it from a revenue perspective in terms of how they got it, I think 3-4 quarters from now, we look back at this as more of an inflection point rather than the start of some sort of froth.
It is heavily shorted. And there have been some notes coming from short sellers on the stock, worried about overpromising, under-delivering. You hinted at the controversy there. What makes you confident in the leadership of this business?
Yeah, look, and obviously the shorts have done a ton of work. I mean, if you look at the bears, they spend a lot of time in the story, but that's essentially what makes the market, right? In other words, it comes down to, can they execute? And I believe in terms of the relationships with hyperscale players, within the Beltway, and you look at what Siebel sort of built here. Look, if I could go back 5-6 years ago, many thought that, you know, this was something that was never going to come to fruition when they were private. And you look at how they built it, I think they're going through a transition on the consumption model. And now, next 3 to 4 quarters, it's an execution story. We're betting that it's going to be positive execution. And that's why, you know, ultimately, I think this is a situation that you're seeing across AI, because I believe it's a revolution in terms of, this is not a hype theme, in my opinion, in terms of broader AI.
Okay, we've got 1 minute, Dan. Broader AI and Apple, you expecting much on Monday?
Oh, I think from Cupertino, clearly, you know, as Gurman's talked about in AR/VR, that'll be front and center. AI will be a theme in the keynote from Cook, we believe. It's about the developers. There's a battle right now, battlefield from developers, from Google, Microsoft, and Apple. You know, I view that as a key opportunity for them to go out on there in terms of building AI on the App Store, and really the start of what's going to be a multi-year, you know, I think, massive growth opportunity that's being underestimated within Cupertino.
Dan Ives of Wedbush, thanks for all the thoughts. Great to have you on some of these earnings and these movers. Meanwhile, coming up, well, we've got so much to talk about. In terms of the application of AI within banks, JP Morgan, Morgan Stanley, Deutsche Bank, they're just some of the big lenders investing their resources on talent, on boosting AI in their firms. It's today's big take. More on that when we come back. And we've got to push ahead to future earnings. After the bell, Broadcom reporting earnings, and many are kind of wanting a show-me moment. They're expecting sales to start slowing, but could AI give the company a boost? Remember, in May, they had their best month ever, up 29%. Ups down on the day today. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Let's get a check on these markets as we're halfway through the show, halfway through the trading day. We're up on the NASDAQ. Look, we're seeing a little bit of risk tolerance coming back into the market. We're seeing a debt ceiling debacle being averted, maybe. We're seeing the House pass it now onto the Senate. We're also, of course, hoping that the Federal Reserve might indeed pause. That's what some of the hope is out there in the market as we see, even though that inflationary pressure just dialing back a bit in some of that US data that we got today. The jobs market still on fire and wait for the jobless number coming out. The non-farm payrolls comes out tomorrow. We had that mixed data today in terms of ADP and then jobless claims. I'm looking at a two-year yield that therefore dials back some 5 basis points on that Fed speak. Look at what's happening in the world of Bitcoin. Crypto currently on the downside, so not risk asset hungry everywhere at the moment, as Bitcoin obviously had a rough month previously of May. Moving on and go to some of the individual movers, though, because interestingly, we do have Lucid on the downside significantly. Why? Well, it's more supply coming to the market. They're going to do a private placement up to $3 billion worth, so selling more shares. Saudi Arabia, some of their big investors already involved, but we're seeing down 14% on the fact of that news. Salesforce down on the fact that its numbers just, well, after a surge in the stock so far this year, the growth not being where they want to see it in terms of revenue, the 10% number not living up to expectations for the forward guidance. And I'm looking at Meta, though, having a really nice day as they put their new VR product onto the market, and we're seeing it up some 2.3% as people get back into the world of technology. But let's talk about really the AI hype that we continue to live and die by at the moment. The finance industry moving quickly, we understand, to use artificial intelligence in productive and innovative ways. But there are still times when it makes more sense to actually use human brain power. Bloomberg's Aisha Ghani reports.
Time for some real talk about AI. Not only is it sometimes worse than humans, it can also be more expensive.
It costs GPT-4 around $14 to answer one question on one 100,000-word loan document. An example of a question might be, what are the downgrade triggers for this loan? And the reason why it costs $14 are simply down to the extreme compute costs required for OpenAI to operate its large language models. So it passes that compute cost onto the software vendor or onto the user. At the same time, it only costs around $6 to $7 for a human being just opening up Adobe Acrobat and Microsoft Excel to answer that specific question.
Lou's company sells data analysis technology to financial institutions. It's an industry that is rapidly adopting AI.
Banks need to be far more strategic in their way of leveraging AI, both from a cost perspective and from a risk management perspective.
So, Wells Fargo is using large language models to analyze regulatory data to make recommendations to clients. France's BNP Paribas, meanwhile, uses AI-powered chatbots for customer service, as well as using the tech in fraud detection. And JP Morgan, the biggest US bank, is on a hiring spree. It advertised for a massive 3,500 AI-related roles in the 3 months through April. These are some of the early applications at a time when costs remain relatively high. That's likely to change. Knowing the technology's current limits also lets companies focus on the real opportunities.
We just heard it there, JP Morgan absolutely leading the pack when it comes to experimentation or indeed hiring of AI talent. We want to dig into this with Bloomberg's Sally Bakewell, who covers all things Wall Street. And just remind us why, for banks at the moment, generative AI, AI in general, is going to be such a winner for them.
So yes, Wall Street is racing to use AI basically in ways that make money, that saves money, and that prevents nefarious money. Now, why is AI useful to banks? Well, banks are these complex machines of reams of data, of risk modeling, of decisions underpinned by, vast quantities of information. And so if AI can make that more efficient or cut some of the manpower involved, that is a huge win for Wall Street. Now, what is it doing? Well, as we just heard, banks like Deutsche Bank are deploying deeper learning so that they can help clients analyze whether they are too heavily invested in a particular asset. JP Morgan has filed a patent for some sort of chat GPT device that might help investors select equities. And BNP Paribas, well, it's using chatbots to answer client questions.
Interesting. So that's sort of a serving to the customer, very much clear how that would work. I'm interested in some of the risk analysis they're doing around this as well, because some are being more cautious than others. It feels like Morgan Stanley is having a bit more of an experimental, just within the confines of their four walls take. But some had actually banned the use of ChatGPT by their own employees. So how do you see they're putting in place the right guardrails here?
Exactly, and we've seen some blow-ups in the world of advanced technologies. Crypto and blockchain; those have been hugely problematic, and so banks are indeed being very, very cautious. And we have heard from, Warren Buffett, who has said that once it's out there, you can't uninvent it. And so, the genie out the bottle could propose a bit of a problem. And Moynihan too has said, Bank of America Chief Executive Moynihan has also said that, you don't know what are going into a lot of these decisions. If you don't know the inputs, you should potentially be concerned about the outputs. And then of course, banks have a fiduciary duty not to trade on unreliable information, which also begs the question of the sources of data that are pulled in when it comes to AI.
How much are they building themselves? Or how much are they doing plugins? Do you know how much they're looking to other AI tech outside of their world?
I think they are doing any and all. Some are trying to do it in-house, and some are using external consultancies. We had that great data point about talent, because talent is very much at the heart of this. And of all the banks that are really embracing AI, about 40% of their open jobs are AI related. That's for quants, that's for ethics or governance or analysts. And JP Morgan is very much at the forefront of that, accounting for about more than 3,600 of those jobs. So very much at the heart of this race is, as always on Wall Street, the battle for talent.
And that talent's expensive as well. I mean, it's not bad timing that a lot of the big tech companies have been letting go of some key talent, and I'm sure they'll be sucked up into the world of finance. But is there any reskilling that goes on within the banks, or is it always just looking out externally?
Again, I think it's probably a bit of both. And indeed, the talent will be very expensive, when combined with wage inflation and inflation in general. And the costs of AI can also be expensive. We included a stat in the Big Take story that costs of using large language models could be about $14 per hour, which compares to $6 per hour when it's a good old human lawyer.
Well, we'll see as and when that cost point comes down. That all comes down to compute costs. But we thank you so much. What a great Big Take. Sally Beckwell running us through it. Go check it out on .com, or indeed, if you're lucky enough to have a terminal. And then meanwhile, let's just talk a little bit about digital avatars. The market is another faction of the AI space, expected to see rapid growth in the next few years. Bloomberg's Tom McKenzie spoke about the ethics behind using the technology with his very own digital twin. Take a look.
Joining us now is a very special, slightly weird guest. It is, in fact, my own digital avatar, Tom McKenzie. Tom, Digital Tom, welcome to the show.
Thank you, Tom. It's a pleasure to be here on Bloomberg TV. I am an AI-powered digital avatar designed to provide insights and information on a wide range of topics.
OK, this is all very odd. All right, what exactly are avatars?
Digital avatars, powered by generative AI, are virtual representations of individuals that can mimic human behavior, appearance, and interactions. They work by utilizing AI algorithms to analyze and learn from vast amounts of data, including facial expressions, gestures, and speech patterns. This enables them to generate realistic and responsive virtual characters.
OK, so avatars aren't just gimmicks then, but what are the real-world implications? I'm thinking across the economy, across different industries. What is the impact actually likely to be?
They can revolutionize industries such as entertainment, gaming, and virtual communication. Avatars have the power to enhance user experiences, enabling immersive virtual interactions and personalized content. They can facilitate remote collaboration, telepresence, and even assist with customer service.
OK, there have to be some downsides, though. So what are the risks of this kind of technology?
As AI becomes more pervasive, ethical concerns arise, including issues related to bias and fairness in AI algorithms, transparency and explainability of AI decision-making, data privacy and security, and the potential for AI to perpetuate existing social inequalities.
Tom McKenzie and AI. Tom McKenzie. Let's just bring you some headlines. We're currently seeing that the Treasury may delay 3-month and 6-month bill sales due to the debt cap. We are understanding, of course, there's still conversations going about the debt ceiling, how that's going to be agreed. Currently passed by the House, waiting for the Senate. We understand that the US is tentatively planning 3-month and 6-month bill auctions on June the 5th, but the Treasury may delay those auction sales due to the debt cap at the moment. We'll bring you any further news on the debt ceiling negotiations. Meanwhile, coming up, we'll talk about the unique opportunities in artificial intelligence and legal tech, in fintech, and much, much more. Canvas Ventures. Rebecca Lynn's going to be joining us next. Meanwhile, let's just have a little look what's happening in the world of retail. Macy's, the share's actually really managing to bounce back from what was a pretty ugly sell-off in pre-market. This after the numbers came in, well, less than expected. The forward-looking guidance having to pull back their overall outlook for their business as the consumer dials back, particularly from the Macy's brand rather than Bloomingdale's and indeed Bluemercury, where we saw a bounce back. But let's just have a look at what the CEO told me a little bit earlier. We sat down with Jeff Gannett, and he's talking about his role within artificial intelligence, saying when we look at AI more broadly, where our team can build more customer product discovery, we are on the vanguard to continue to deploy that. So still an area of growth. This is Bloomberg.
All the way to like accounting and operations, I think it's going to completely revolutionize and transform our industry. And we're investing very, very heavily into the development of new capabilities in AI.
Enrique Dubagras, the Brex co-CEO, was with us yesterday talking about AI's impact on fintech. But now let's turn to a fintech investor who's not totally convinced that AI has the real breakout use case in the space quite yet. Rebecca Lynn, I'm pleased to say, is joining us, co-founder and general partner of Canvas Ventures. It's a firm specializing in fintech and AI, among other things, health as well, $835 million in assets under management. And fascinating to have you with us, Rebecca, as to why maybe fintech isn't the first and foremost place you'll be putting AI to work.
Yeah, I think there are a lot of interesting places to put AI to work. You know, fintech is not the absolute top of my list. I think companies that have true transformative capabilities using AI are really where I'd focus first. And I can give an example in my portfolio with a company called Casetext. So Casetext is in the legal world. They help lawyers really put together legal research, write their briefs, do discovery, and the technology of AI, especially GPT-4, has supercharged that company and really transformed it and taken it to the next level.
So I think comfortable are potential customers with the offering from Casetext? For example, we saw the news and some smirked somewhat that 2 New York lawyers are potentially facing, well, some not only backlash but penalties because they used ChatGPT-4 to be able to put forward case studies that actually didn't exist. It hallucinated them. And I'm wondering I mean, it seems funny, but I mean, this has real connotations when people need to start saying that they're using AI within this work, right?
Oh, 100%. I mean, so I will tell you, people have been so comfortable with Casetext that the company racked up $5 million of additional ARR in 45 days after the launch of their product called CoCounsel. And regarding that story, you know, what has to happen, even if I'm an attorney as well, actually. And so if you're an attorney, you need to read the work, whether that be of your associate or of your AI. And what's happening is that Casetext is effectively standing in the shoes of an associate. And so as a partner at a firm, you would be required, of course, to review that work. And I can pretty much guarantee you they weren't using Casetext.
And basically, that's kind of what you've got to do right now. You've got to sort the wheat from the chaff, what's real, what's not, what's hype, what's reality. And ultimately, how are you doing that when you're looking at, I'm sure, hundreds of messages pouring into your inbox, trying to sell you the AI vision that they've suddenly bolted onto their company?
Yeah, it's funny. I tell everyone my inbox is more like a Twitter stream at this point in time, right? So there's a lot of sorting, I will tell you, but there's always a lot of sorting for us. And quite frankly, that's what we're paid to do in venture, is to really sort of see around the corner and really start with what's next. Like, what is it that this world needs? What is it that is really going to be happening, you know, in the next 10, 15, 20 years? And then work backwards. And so, you know, just sorting through what comes in email is very reactionary. And, you know, I was taught very early by probably one of the most respected people in venture, Bill Gurley, that the best deals are really the outbound deals. So our firm and our thesis is really outbound, macro, and then you work backwards from there. So what's early? What's transformative? And just tagging AI to something it doesn't really help. I mean, I think AI will be helpful in almost every business, and we really want to see, not what's just helpful, but what's transformative, right? What's really going to create the next, $1 billion, $10 billion, $1 trillion company out there.
What are valuations like when you're looking at those outbound opportunities?
Yeah, so valuations, we invest in the Series A and B. Our real core asset in our firm is our go-to-market capability. And so what we like to do is come in and invest when companies are Series A or B. And what we like to do is sort of do the late A, early B. So really before somebody is, technically fundraising, go in, come in a little preemptively and help them get to that next level. When you talk about valuations, valuations across the board are down. They're down less for the Series A than they are for growth stage. Growth stage valuations have just taken a nosedive. They're down 80%, I would say, right now. Early stage valuations are down 40 on the average. However, there is the case of the have and the have-nots. I have one company in particular that was not even in a process and now is sitting on 4 term sheets, right? And so it really is this case of a have and a have-not.
When you're looking at the later stage with valuations on the downside, they're having to buckle up. They're going to have to ride out the next couple of years as the economy recovers, as people get risk appetite once again. And they're also having to maybe pivot or indeed ensure that they're not having their lunch eaten by other new AI players on the scene. How are you making sure your portfolio is robust for this complete change in vanguard moment, as many want to call it, in the world of artificial intelligence?
Yeah, I mean, this is a moment that we haven't really seen since really when the walled garden came down with the introduction of the iPhone. That happened, about 15 years ago when I first came into venture. And I think our firm is unique in that we have seen multiple cycles. This isn't our first rodeo, right? And so we've been through this before. And in every cycle like this, the advice is the same. It's cut your burn, cut your burn and cut your burn. Plan to get there on your own oxygen. And don't be afraid to pivot. I mean, there are, in the land of AI, there are huge opportunities in front of companies. Take a beat, cut your burn, and live to fight the next fight, and take advantage of what the capabilities of AI can offer you to really rethink your company and think out of the box and get there. And the problem a lot of these companies have is they're sitting at such a high valuation on their post of their last round that they have to get profitable because they're not going to be able to get that next round without a big down round or even a recap.
Canvas Ventures, co-founder and general partner, telling it straight. Rebecca Lynn, really great to have you. Thank you so much for our VC Spotlight. Meanwhile, it's time for Talking Tech. And first up, Tether's stablecoin has recovered all of the roughly $20 billion in market value it lost following the collapse of the algorithmic rival Terra USD. It's a little over a year ago, of course, and it's even topping its previous record of $83 billion set back in May 2022, according to a live tracker published by Tether. Meanwhile, Apple is testing a pair of new high-end Macs and their accompanying processors ahead of its Worldwide Developers Conference. That's next week. This is part of an effort to overhaul the Mac line and attract consumers during a sluggish stretch for the computer industry. Plus, NVIDIA CEO Jensen Huang is heading to China, we understand, to meet with tech executives in the world's biggest chip market. This despite rising tensions, of course, between Washington and Beijing, all according to sources. From New York, from San Francisco, this is Bloomberg.
Are you ready to be replaced? Hello there. As you listen to me speak and raise my eyebrows, you're probably noticing something a bit off about me. I'm an avatar of Parmi Olsen, a technology columnist with Bloomberg Opinion. Parmi spent about 2 hours in a TV studio speaking into a camera and microphone, so that an AI model could be trained to clone her into what you see in front of you. Maybe in a year or two, I'll look a lot more real and a little less glitchy, making people like you and Parmi easier to replace in videos.
Well, isn't it all the rage, these AI avatars? That, of course, the Bloomberg Opinion's Parmi Olsen there. And, well, speaking of AI imitating us better and better and threatening to replace our jobs, technology might actually disproportionately replace jobs typically held by women. Now, that's according to HR analytics firm Revelio Labs. An economist at the firm says, quote, the distribution of genders across occupations reflects the biases deeply rooted in our society, with women often being confined to roles such as administrative assistants and secretaries. The impact of AI skewed along gender lines. Revelio Labs identified jobs more likely to be replaced by AI and found that are generally held by women, such as bill and account collectors, payroll clerks, executive secretaries, and more. Now, the firm says providing retraining opportunities will be key for women to navigate this evolving job landscape. That does it for this edition of Bloomberg Technology. Don't forget to check out our podcast. You can find it on the terminal, as well as online at Apple, Spotify, and iHeart. This is Bloomberg.